Good morning, everyone. It is Throat Punch Thursday, August 19th. This is a look at the watch list, which is really just more of a talking about the markets this morning, not putting out any specific plays, but we'll look at a few charts and look for some new setups. I'm going to go ahead and cut my Microsoft and eBay, my QCOM. I'm going to go ahead and cut those if they don't start. So everything's kind of coming in today on a move down, obviously, with the overall market. You can see here on the SPY that it looks like we're about to have a date with the 50. Now this is the future, so it looks a little different than the regular SPY chart. In the SPY, I'm not sure if it actually touched the 50 yet. I'll take a look at that. But the 50 looks like where our date is going to be, and the 50 here previously has been some pretty awesome support. Now, that doesn't mean that because it has been support that it will continue to be support, but it's definitely a pretty big line in the sand that we need to watch for. So we've seen here that we've pushed through it, even closed below it to come in the next day to come up. Here's the thing, I don't want us to have this close near the 50 and everybody say, oh, look, it's the 50 and look what we did before, so we're going to go ahead and anticipate that move. We don't want that. We don't want to anticipate the move. We want to participate with it. But there'll be all new opportunities coming in this. So one of the, or a lot of the discussion and analysts, they kind of throw all kinds of stuff out there and talk about, well, we're going to taper. And as soon as those Fed minutes came out yesterday, that's when we really started to head south. Had the initial reaction, kind of fought back to get back to where we started, and then started falling off even more and closed on the lows yesterday. You can see that here on this chart. We closed below the 20. But here's the thing. This is so important. This is when you need to look at the macro picture, not the micro picture. Why are they talking about tapering the stimulus? Anybody? Right? The only reason they're doing it is because our market has been so strong. We just came through earnings season, and I know that after earnings, like these companies reported awesome, solid earnings with, they're sitting on stacks of cash, which is just incredible. And, Apple, it's fallen off here to like 144. But, up over 150, I forget exactly where it needs to be, but over that 150 mark, it's going to be like a $2.2 trillion company. I mean, it's just amazing, right? And the world puts their money here to work in our market. Well, why do they do that? Well, partly because it is so regulated. But a big portion of that is because our market has continued to grow. And so although we see, like right now, the Dow futures are down 380 points. Sounds really painful. That's 1%. It's just over 1%, right? We haven't had a 5% correction for more than 10 months. So we look at this and we look at our individual positions. We're like, oh my gosh, this is terrible. We're topping. And maybe we are. I don't believe that to be the truth. But maybe we are topping, but we haven't seen that yet. We're on our third red day. Tipping over will be much more like what we experienced right before COVID. I don't think I actually have a 1-day 5-year chart, but oh yeah, there we go, right? This is a turnaround, right? We have to keep things in perspective. Right, this is COVID, this is the shutdown. We came through the 50. Once we got close to that 200, wow, right? And just went crashing through it. So we've had some small corrections before, right? Here, maybe one. Here ago October, right? So we've had them. They don't crush us, but we get so focused on just our accounts that we kind of forget that there's a whole forest out there. And that these pullbacks are good. The last time we came through the 50, we came back in, and wow, we had some really amazing trading. at this opportunity here, at this opportunity, and this opportunity. And that's what we're going to do. We're going to look for those opportunities. Now, why am I going to go ahead and cut my positions? Because there's no reason to just sit in them right now, right? I want to be able to have what's left of that capital and redeploy it to where it can be best used. Always use your resources to where they are best used. And right now, I think having that cash is a great idea. Now, that being said, I am not a bear. I am not a bear at all. I definitely tend to be more on the perma bull side, but I can read a chart. I can read what's going on in the market, and overall, our markets are still strong. The bond market is telling us that we're going to be okay. They like the Fed policy. They like that interest rates will look to be raised. I think like 2/3 or so of most of the Fed heads came in, and I think it might have been over 2/3, agreed that there should be some interest rate hikes by the end of 2023. And many of them agreed that they need to start looking at this tapering, because you can't just keep pushing money out. Now, there's a lot of other stuff going on in the world right now. Domestically, we're still looking at the infrastructure and the budget plan that the administration has put out. That's a lot of cash. I personally think it's overextending, but that's what we have to deal with. And then we have to look at, right, COVID cases. People somewhat in fear. Are we going to shut down again? I don't think we'll see a shutdown like we had before, but some small pockets are definitely pushing mask mandates and all kinds of regulation and restrictions on businesses, schools, things like that. So we have to deal with that. Travel, right? We aren't going to be traveling as much. We heard yesterday that from the TSA that the travel was down. It is beginning to decrease again. Now, part of that's the end of summer and everybody's going back to school, but part of that is because people don't want to get on a plane and have to wear a mask or fearful of the new variants in COVID. Then we have Afghanistan. And when we look at Afghanistan, it's not just the complete tragedy that's happening there. When we think of Afghanistan, we have to think of the global implications. What is China doing? What is Russia doing? What is Iran doing? And those things are definitely not talked about enough, but they are affecting markets internationally. And these things that happen that put our market in a little bit of a tailspin, it is natural for it to happen. If it's not this, it will be something else. So let's take this for what it is. Take some of those downside plays. If you feel like you need to hedge, absolutely do that. If you want to hold the positions that you're in, why not hedge against them on a shorter term basis or just on a day trade? You can play puts, right? I don't believe in shorting stocks, but you can play puts to play to the downside, even while you're holding a call in the same play. That is totally good. Or you can play something like TLT, because that'll give you a hedge as well. There are definitely options out there for hedging, or walk away. Just let this settle out. When the dust settles, come in, sweep it up and say, okay, now I can see very clearly what I want to play, the direction in which I want to play it, and I can do it from a place of confidence. So that is my market spiel this morning. So although I will be cleaning out my longs here, I want to be very clear on this, I am not a bear in the market. I can be a short-term bear, but still have a long-term bullish outlook, and that is where I am right now. Okay, so let's watch for that 50. Few things I do want to go over real quick. Hood reported, and you can see that this one, excuse me, still fighting this stupid cough. This one took a pretty good dip, but in the pre-market here, starting to inch its way back up. Possible reversal play here in Hood today. But NVIDIA kind of surprised me. They, I heard and kind of saw this part of the action, and when I got home last night and took a look, it was sitting in here not so bad. it's given up some of those gains, and but will be opening higher from where it closed yesterday, but still inside yesterday's candle. So potentially some day trade plays here in NVIDIA. I know some of you held on to that NVIDIA play, and you are probably sitting about where you were before. Another one that I actually do like for the long side is Lowe's. All right, so it's a little bit lower than it was yesterday, but check this out. This was the, they had earnings, and look at this big old move to the top side close. Considering how much the market pulled back, this pulled back not nearly as much. I like where it's sitting. I actually like it here up over 201.60 or 201.75 in that area right now. It's right. I just want to make sure. Yeah, like 201.50. Yep, 201.50 is where I like it. It's at 198.18 right now. It's just inside the top part of the body of this candle. So looking for a move on continuation. That is so great. I think, you know, pretty decent setup. Home Depot, although it initially popped yesterday, it gave up most of its gains, so I will just continue to look at lows there maybe for a day trade. A little bit harder sometimes. Their options aren't the best for day trade, so we'll have to take a really close look at that. Kohl's reported, and on the it's actually kind of right back to where it started here in the pre-market, up above yesterday. There we go, up above yesterday's close, but not too far off of that. But this one might give some pretty decent volatility as well, so we'll keep an eye on that. PLTR. So this one's a bit lower than it was yesterday. PLTR, looking at this a little bit longer, I kind of like this for a longer term play, looking at the equity in this. I'm going to buy shares. I'm looking to buy shares here, but I'm going to continue to watch this trend line. So we're going to be opening up right now we're sitting at 24.88, so we're still above this point of control line, so I like that. Really looking at about a 26 entry point there, $26 entry point. Used to be like when I was looking at this before, it was like a 25 to 25.50 entry, so I'm going to bump that up to the 26, make sure we're squarely above this trend line there, and again, that will be shares that I intend to add to my IRA. All right, that is it for me this morning. There are some other plays out there that look good. Remember that that keeping an eye on that 50 is really important here. We want to see and have it prove to us that it wants to move up or hold the 50, maybe hit it, go through it, and come back up through it. Don't anticipate a reversal just because it's at the 50, okay? Don't anticipate that. I'll make the chart work for your attention. You shouldn't be working for its attention. Okay, everyone, if you have any questions, reach out, heatherc@givingtreetrading.com. If you have any anxiety going into today or have any anxiety while you're trading, reach out, send me an email, send me a private message. We can also get on the phone. I talk to people all the time, and we'd be more than happy to talk to you, talk about your trade plan, what you're looking for, how to reach your goals. That's what I'm here for. All right, have an awesome day.